Welcome, everybody. We got a special guest with us tonight. It's going to be a lot of fun. We're going to talk about funds. Fun talking about funds. Yeah, right. But happy to see everybody today. I did want to share something. A lot of times when I start calls with the tribe, we talk about our big wins first. But hopefully, I've got one and almost two big wins for the week. We sold a property on Tuesday, did pretty well with that. Fortunately, the market has done what the market has done. And number two, closing on another property tomorrow. It's going to be a purchase on this side. Small JV, me and three friends, coming together to buy a 60 unit in Ohio. We all got our money wired, document signed today. So unless FedEx screws things up, I dropped 80 units on Tuesday and I should be adding another 60 today. So almost a wash, Anyway, great news for me anyway. So that's my big win. Anybody else have big wins they want to share? If I share a big win, I think we got to open it up. Anybody else? It doesn't have to be as big. All right. Awesome. Well, that said, introduce Badri today. Badri's, seems like I've known Badri for like 10 years now. I know it hasn't been that long. I'll tell you, I remember getting on a call with him, probably been about a year and a half, and he told me about the Avester concept. And at the time, I was still with Four Oaks. And I remember listening to him talk about his product, the product that they have, and how they can customize funds. And I remember thinking, man, this is it. This is a really amazing product. It's got a lot of value in the marketplace. It's something that can help people who are fundraisers. At the time, it wasn't the right thing for me, but as I transitioned away from Four Oaks and onto doing my own thing, all of a sudden I started looking at, okay, what's next, and the Avester customizable fund ended up being exactly what I was looking for end of the day. That being said, I think a lot of people, the idea of funds, I think people have an idea of what it is, but may not be accurate. So I asked Badri to come in and talk about funds in general with us today, and then obviously give him a chance to tell you exactly what the Avester customizable fund is. And that said, Badri, welcome, thank you, and floor is yours.
All right. Thanks, Brian. Hey, it's always a pleasure to talk to your group. I really appreciate the opportunity. So what I'm going to do is I'll not put this in presentation mode because it's easier to just flip around. I'm assuming people can see my screen. The title of the talk, I decided to say, instead of, yes, we'll talk about funds, but I wanted to frame it. We'll of course talk about customizable funds and Avester too, but why do I believe that funds are a better tool, or maybe even the best tool for capital raising in a recession? I want to kind of talk about why funds tend to perform better in a recession time. And then we'll kind of go from there. But I always like to kind of make things a little fun, a little bit about myself. I'm a duck. I know. So I guess we have had some, let's say, interactions with Utah. We won't go there.
I think the winner of the Utah-Oregon game this year is going to be the Pac-12 champion. That's all I got to say. Whoever wins that game is going to.
You mean when the Ducks win the championship? But that's okay.
That's funny. That's funny. I remind you, last year Utah beat Oregon twice.
It was just a fluke.
Yeah. Once is a fluke. Anyway, enough.
Yeah. I have an interesting background. I was an exec in a Fortune 500 company, but really I've done multiple startups. I live in Portland, Oregon. I love travel. My goal is to visit every country in the world. I'm up to about 70. Still a lot to go. Every country in the world which is safe to visit. Avid hiker. I also used to run a hedge fund which involved index trading options. Love skiing. Some pictures of me and my family. We travel a lot, at least a few trips a year. And this is my two lovely kids. Both are working and we are empty nesters. Yeah. So much for the general background about myself. So let's go ahead and talk about, are we in a recession? Are we not in a recession? I don't want to get into this big discussion, but hey, it sure feels like a recession. And technically we are, right? 2 consecutive quarters of GDP reduction, right? So in times like this, let's talk a little bit about what type of investor behavior occurs. Now, I want this to be fairly interactive. I mean, if you agree, disagree, I would love to get some input as we go along. It's a relatively small group. So let's talk about what are the different types of capital raising options which are available in not only during recession, for during any time. And then we'll there are syndications, there are SPVs, there are funds, and there are funds of funds. Sometimes these terms are not used correctly, so I just want to kind of give the official definition of the term, and then look at some of the trade-offs between these various entities. And then we'll talk a little bit about customizable funds as well. Yeah. So what are the fundamental behaviors of investors during a recession? Well, at the risk of having the uncanny grasp of the obvious, investors tend to move towards safer investments during times of recession, right? They want to increase their passive income. Jobs are getting a little dicey. I mean, layoffs have not increased a lot, but they're beginning to increase. So they want to have some alternate source of income, which even if they're confident of their job, that's something people want to do anyway. Here is a very important point. They're less looking to people who are willing to sell them the latest deal, as opposed to building relationships with advisors. Now, I don't want you to get all technical. I'm not talking about investment advisors, whether it's a friends and family advisor, or maybe even a formal investment advisor. They want people who can look at their portfolio holistically and make recommendations. They're scared to make single large investments. Yeah, I mean, as capital raisers, you're going to ask people to write a $25, $50, $100,000 check for one investment. They're just scared to do that. I mean, that's just human nature, right? I mean, they want more diversification. They want to have a portfolio that has more liquidity. Life throws a curve at you. I mean, you want a portfolio with multiple liquidity points, and they become a lot more sensitive to expenses. I mean, expenses which doesn't go into their pocket or your pocket, right? I mean, so I mean, if you have an investment which is earning 10% and the expenses are 3%, that's a problem, right? So.
Hey, and Badri, just to add fuel to your fire right there, just raise capital for a deal in Houston.
Mm-hmm.
A lot of stuff you said right there were a lot of the concerns. I mean, I had half of my soft commits fall out, and that's the largest percentage of soft commits that I've gotten that haven't actually wired money. I had more than half of the dollars in the soft commit pile actually back out, and a lot of things on your screen are the reasons. They're scared to make single large investments. They want to be liquid. They're worried about the future, and they're looking for something that's safe. And I think you hit the nail on the head right there.
Thank you. Yeah. So this was, I had put the slides together even before the recession was imminent. So, but yeah, I think. What about the others? Are you seeing similar behavior? Any feedback from others? We can make this pretty interactive. I don't want this to be a one-way conversation.
I know Rick raises a lot of capital. If Rick's able to say something,
I'm able to say something. How are you guys doing? Thanks for doing this, Brad. It's great. Yeah, well, I had a different set of circumstances. I mean, we had like uncertainty going into the recession. I noticed it's gotten a little quiet. Had to get on the horn a little bit more, maybe be a little more interactive with investors. And then actually my deal was in Southwest Florida where the hurricane hit. So I had like
oh no.
I had a couple. I don't see that on your slide here.
Yeah, sorry, a hurricane. I forgot the hurricane part of it.
Yeah, you got to put that hurricane on there. But without a doubt, I think, the big one, I think people are nervous about one big investment. I think that's a good point.
So
thanks,
Rick. Appreciate it.
Mm-hmm.
So what, I mean, forget the recession for a second. Let's not harp on the negative too long. Let's go back and look at what are the different capital raising options, right? So the way to look at it is based on the number of deals you're doing and based on ownership. I mean, there are slight variations, but this is how I kind of categorize it, right? I love putting everything. My kids really tease me. Everything even when I was running a large group, I like to put everything in 2x2 matrices. I mean, I'm a very simplistic guy, so helps me think more logically. Yeah. So if you look at the x-axis, not to get too geeky, it's number of deals, and the y-axis is ownership. So if you're owning the real estate and you're doing a single deal, well, you do a syndication, right? But if you're just investing in the real estate and you kind of do, and a single deal, you do a SPV, or is everyone familiar with the SPV? Similar to a syndication, but primarily you're not really owning the real estate, you're raising money for somebody else. Yeah. So, and if you're doing multiple deals and you're owning the real estate, you typically use a fund. And the term fund of funds, I mean, people interchange the term fund and fund of funds. The term fund of funds is really used when you do mostly investments, but it can also be a combination of both owning and investing in real estate in multiple deals. So let's kind of get the terminology out of the way. And again, jump in if you have any questions. Yeah. People sometimes use fund and fund of funds interchangeably. Yeah. So what are some of the advantages of each structure? Syndications. Hey, I think all of you are here because either you want to be a syndicator, or you've done some syndications, or you plan to be a syndicator. So simple concept to understand. You have full control over the asset. The risk is completely limited to the asset, and you can co-GP if needed, and pretty fast to execute. I mean, our aim is to completely disrupt the syndication market, but I know it doesn't happen overnight. But this is the most common way to raise money, right? So an SPV, it's a lower cost to set up than a regular fund. The risk is still limited to an asset. The operations are fairly simple and fast to execute, like a syndication. And if you look at a fund, remember, a fund is something which owns multiple deals in one fund, multiple deals in one structure instead of multiple structures. You can have multiple assets. Again, you have full control over the assets. The fundraising is separate from the asset, usually in a blind pool fund. I'm not talking about a customizable fund. We'll get there in a second. Typically in a fund, you start a fund and say, hey, Joe, I'm doing 50 to 100 apartment units in Texas. These are the type of deals I've done in the past. Do you want to give me some money? And once I find a deal, then we'll allocate it, but give me the money in advance, right? Little harder to, especially in times like this, people are a little hesitant to put money in a blind pool fund like that, hoping that, hey, I'm sure he'll do a good deal. I trust him. Unless you have a very strong track record and you have a really, really strong relationship. And even if you do, times are changing, right? So, and you definitely do diversify risk because you're investing in multiple assets. And in the fund of funds, again, you have multiple assets. You have the investment flexibility. You don't have to own the asset. You again diversify risk. And this includes both passive and active investments. Yeah. So what are some of the disadvantages in a syndication? I'm sure Brian can relate to it. I'm positive. I'm pretty sure he doesn't like the short race time. Okay, you have it. The clock has started in 3 weeks, 2 weeks, 1 month, whatever it is. You have to raise $X million, and it's a mad race to the finish, right? Mm-hmm. It's separate for each deal. It's okay if you're doing 1 or 2 syndication deals a year, but imagine if you're doing 4, 5, 6 syndication deals a year, and in 4 years you have 20 syndication deals. Or even if you're doing 3, I'm brilliant at math. 3 times 4 is 12, right? So 12 deals, all that starts getting, it starts adding up. You have to have a separate PPM for each deal. I think you guys know by now what a blue sky filing is. You have to do a blue sky filing for each, for the first investor from each state in each deal. And you have to have a separate management LLC. You have more taxes, more accounting. And it kind of starts becoming a little complex, right? So, and similar concept with SPV. Again, you have to do a separate one for each deal, and you have a short raise time. And you don't have any control over the asset here, unlike a syndication. And in a blind pool fund, like I said, there is less transparency. You're dependent on the track record of the sponsor. You just have to blindly trust him and hope that he'll do good deals. And there is an additional layer, certainly, and there is some cross multi-asset liability, which is, if something which can go wrong in one deal can bleed into another deal. And in terms of a fund of funds, you again, a little bit of less transparency unless it's a customizable fund and there is an additional layer, right? So any comments about anything I've said so far? People familiar with all these 4 concepts?
I would just say some, and I could be completely wrong just because I'm ignorant when it comes to funds, but something I do like. So I'm a co-sponsor, and you can take on as much work or not, just sort of leverage the operator as much as you want. So like oftentimes the operator will have like a portal, and they'll have like a co-sponsor portal. So you just kind of tap into that. In terms of like the PPM and all that, they take on the lead sponsor takes on the lion's share of that work. And I'll have conversations with people who do funds, and I'm not sure if they're doing it correctly, but it always seems to me like, wow, this sounds like a lot of work they're taking on. They're doing the K1s, they're doing the distributions. So that definitely I want to see what being here today, I want to see what the positives are.
Sure.
And how I'm incorrect or whatever.
No. I mean, a fund does have additional work, but the question, I guess, is, if you're just starting out and see what happens when you send your investors to the main GP. So regardless of what other portals tell you, once they have to issue the K1, the main GP has complete access to your investors. Now, I can't tell you how many cases we have had where people have come to me and said that, the main GP has started contacting my investors. Maybe it's intentional, maybe it's not intentional, right? So that is one of the biggest advantages of using a fund for capital raising efforts. You are establishing complete control over the relationship with the investors, and the main GP has no access completely at all to your investors. All they'll know is that the Rick Martin fund has invested $500,000 or $1 million, and you're controlling the communication, you're establishing your brand. I know that may not seem important to you if you're just starting out and it's your first deal, and that's okay. You can co-GP for the first deal. That's point number 1. Point number 2 is today, if you partner with 4 different co-GPs, you're sending your investors to 4 different portals. Maybe they're all using the same portal. And the investor experience is not streamlined at all. And again, they're not seeing your branding. And finally, the last point I would make is if you really want to grow, you need to establish the relationship with your investors and completely control the communication with your investors. Does that? But having said that, yes, there is extra work in running a fund, but you'll have to decide if the extra work, a platform like Avestor will, of course, help you streamline a lot of that. But regardless of whether you use Avestor or not, the question, I guess, is you'll have to decide if that extra work justifies the fact that you're building this long-term relationship with your investors.
And Badri, I'm smiling real big, and I hope Rick is too. Rick came and partnered with us on a deal, and when we changed CRMs over, my partner didn't tag everybody properly, and we ended up sending a solicitation out to Rick's investors. It was unintentional, but what you said has actually happened, between Rick's investors and our my previous company. But it does happen. And and Rick, one thing that he did mention, when you set up a fund of your own, I mean, you can join the Appfolios or Avestors or whatever portals of the world, and you can put all of your investors in a single portal, which, depending on how you want to run your capital raising brand and business, I think that is a lot more convenient if you're trying to centralize things. It is more work, though.
Yeah, definitely. I mean, the biggest pain point is having different portals. I've been sort of fortunate, like a lot of people use Syndication Pro, and they have like a co-sponsor portal where you can kind of brand things. But no, I understand all your points. They're good points. But that is the biggest pain point, having, not having one streamlined portal is an issue.
And I actually forgot to mention one very important point too. Let's not forget our friends at the SEC. Well, even if you don't consider them as friends, you better be at least aware of them. And very often, and I know Brian does a fantastic job in educating this group. So very often you're just capital raising and not really taking on additional responsibilities. And, things can go well until they don't go well. So whereas if you're operating a fund of funds, then you can take on a co-GP stake without taking on all the additional responsibilities, which you may or may not want. So it's a lot safer ground to be on a fund of funds than try to take on a quote unquote a pseudo co-GP stake. And most of the work you're doing actually is capital raising. I'm not talking about the people who are really have boots on the ground and they're finding the deal. There are people like that, but we have run into so many situations where all they're doing is capital raising and they're really pseudo co-GPs, so.
Yep.
So I'm going to make a bold statement. Well, not so bold, I guess, but considering where I'm coming from. I'm going to go out and say that, go out on a limb here and say that funds are really a better tool during a recession. Doesn't matter, what type of fund. I prefer a customizable fund, but that's neither here nor there. But in general, a fund or a fund of funds is better. I would like to tie this back to all the points which I made. Why are funds better? One, the most important point, not the most important point, but the relevant point is that a sponsor has more flexibility to raise capital and you're not under pressure to deploy capital. So, and especially a customizable fund, right? And like I told you, investors prefer diversification, and a fund inherently gives you diversification and you're spreading risk across multiple assets. And if you recall, I had mentioned that people are less interested in, investors are less interested in people who are willing to sell them, hey, here is the latest deal. Why don't you invest? Let's move on to the next deal. They really want to build more of a trusted relationship with somebody who can look at their entire portfolio, and a fund of funds, and especially a customizable fund, will allow you to do that. So you can look at it and say, hey, based on your background and based on your particular situation, you probably want a little more cash flowing investment. So maybe you do a combination of pref equity or a debt to generate more income. But the point is, yes, you're giving them one deal at a time, but you're keeping their, given that they're investing in the same fund, you can look at their holistic portfolio and work with them on an ongoing basis to migrate them towards their long-term goal, as opposed to just immediately selling them the next deal and moving on to another deal, which may or may not be a fit for them. Yeah. And funds are far more cost effective than individual syndication deals for obvious reasons. You have one PPM, one blue sky filing, less accounting, less taxes. And another advantage of the fund is if a deal falls through, the capital is still available for another deal. You can move faster when you find the next deal. And like I said, you can use the fund to create a holistic portfolio and balance passive income with long-term capital gains. So what are customizable funds? So they try to combine the best advantages of funds and syndications. So funds have one PPM, which is a big plus. Funds have fundraising flexibility, which is again a big plus. It's a plus for both the sponsors and the investors, really. Capital stays in the fund. What do I mean by that? When a deal exits in a fund, you don't have to give the money back. Think of it like a virtual cash balance, right? So people can just leave the money there, and then it's a lot easier for you to go to them and say, hey, Joe, I made around 20,000 for you in this deal, and I have a new deal coming up. Do you want to let it stay there and invest? Whereas in the syndications, you really pretty much legally have to give the money back as soon as you get an exit, right? You can't just leave it here saying that in a couple of months I have a deal. There are some advantages of syndications too. The investor knows exactly what deal they're investing in, so they can select which deal they're participating in. And there is deal level transparency. I mean, what you're making in the deal as opposed to this big fund and I don't know, I thought I made a lot more money, but somehow when you average it all out, it's all gone. But so you know exactly what you're getting in. Tax benefits, depending on how funds are structured, sometimes the tax benefits do not come through. And but whereas in the syndications, you get all the depreciation benefits and everything else. You guys, I'm sure, are very familiar with all of that. And then you can grow your investor base over time. Whereas in the funds, again, you're under pressure to, the blind pool fund, you're under pressure to get the capital all up in advance. So customizable funds kind of combine all of these benefits of funds and syndications and add a couple more advantages. Customizable funds give you massive, massive business model flexibility. I mean, you can literally put almost any asset class. I know we are talking about real estate here, but for example, we have funds who are doing music streaming rights, startup investing, judgment liens. The flexibility is just immense, right? I mean, you can do within real estate, Airbnb funds, self-storage, RV parks, multifamily. You cannot do that, obviously, in a syndication deal. I mean, a syndication deal is one deal. I mean, obviously, you cannot have business model flexibility there. You're going and doing that deal. And you also still cannot have that in a blind pool fund. Because can you imagine going to somebody and saying, hey, you know, I don't really know what asset class I'm investing in. Oh, by the way, I don't even know what geography I'm investing in, but here, just write me a check for 100,000, trust me. Right? So whereas here, you can change your business model. Suddenly you have a great partner who's willing to do a self-storage deal. It gives you massive flexibility to do that. Yeah. So, and then by far, this is the lowest cost option. And I don't want to get into the details here. We even have a calculator which allows you to compare blind pool funds and syndications, doing different syndications, and because of the cost savings of PPNs and less accounting, less taxes, you can see where the lowest cost savings come in. So basically, customizable funds combine the best attributes of syndications and funds. So this is the first part of the talk. I just wanted to talk. I mean, the question, I guess, is as you capital raise, are you really prepared for an upcoming recession or the recession which is already here? Investor behavior is already adjusting to a new reality, and traditional syndications and SPVs are really not designed for flexibility. Mm-hmm. Funds do, both funds, I mean, both types of funds do provide more control to the sponsors, and customizable funds really address a lot of the limitations of the traditional blind pool funds. Mm-hmm. I did want to spend about 5-10 minutes talking about how the Avestor platform supports customizable funds, but let's have some discussion here. I mean, do people feel they understand the difference between a syndication, an SPV, fund of funds, and a customizable funds? Any feedback or comments?
I'll say something. I'll just double down on something you said earlier. You know, one thing, we sold a property Tuesday, okay, and we took about $2.3 million in investor capital and put it back on the streets. You know, and as a capital raiser, as a syndicator, you know, what do you want to see? You want to see that $2.3 million go back into your next deal. Okay? Exactly. And who knows if that's going to happen? You know, hopefully it does. You know, a lot of operators will try to do 1031s and see how many people they can keep inside, and then do 1031 into another deal. But, you know, Badri mentioned once you return the investor capital, it's hard to get back. And the benefit of the fund is when a deal comes full cycle, your investors invested in the fund and not in the deal, if that makes sense. Okay. So when the deal comes full cycle, by default, that money stays in the fund. Right. And so what does that mean? It means that if they basically have to ask for the money to come back, you know, which if people want it back, you give it back, not a big deal, but the default is the money comes off of the deal back in the fund. And now as a capital raiser, as a syndicator, whatever side of the fence you fall on, you know, when you have your next deal, that those investors could still have a large chunk of money sitting in your fund. And at that point, when you look at what their default answer is, are they going to take the money out and start shopping for new investment opportunities? Or are they more likely just to take the next investment opportunity that you have, because they don't have to sign a new PPM, they don't have to do all the legwork. It's just there, it's easy, it's convenient. So that's one of the bonuses to the funds, especially the customizable fund, is I'm expecting the people who invested with me in my fund, I'll probably have a much higher redeploy rate in subsequent deals, just because the default is the money goes back into the fund and not back into their bank account.
Just to build on that, we have our own fund, which we built to test out the platform. And I would say less than 3% of the money gets withdrawn. People just keep reinvesting, saying, hey, here, just leave it. I know you'll have a new deal in the next month or so. I mean, that's been our experience. So,
yeah.
Sorry, somebody else was saying something.
Yeah, I'm just like both of you guys. One thing there, I almost see it as an advantage when there's a limited time to raise, because it kind of provides this sense of urgency for investors. I mean, most of my raises, I get the soft commits, the commits, whatever it's all front loaded within the first week. And then you get a few stragglers. So I'm wondering how you motivate people to invest when you have all this time. That's the first one. And then the second one is, are people comfortable leaving their money in there and thinking, am I earning any interest, or what's going on while it sits there and I wait for the next one? If they're concerned with the velocity of their money.
Oh, excellent questions. And that's exactly kind of the problems which customizable fund tries to address. So in a customizable fund, you're still raising money one deal at a time. So you can create all the urgency you want and saying, hey, this is the deal. There is X amount of time to raise that money. I mean, it's no different. So the fact that it's in a fund is almost an afterthought. I mean, a lot of our clients actually don't lead with the fund. They lead with the deal and they say, hey, by the way, it happens to be in a fund, right? So there is no difference from your perspective or the investor's perspective initially, because you're leading a deal at a time. So that's point number one. And point number two is, none of our investors have complained about leaving the money in the fund because, right now, I mean, at the time, the interest rates were ridiculously low, but now you can get something non-trivial. But that is up to you. I mean, if you want to offer some nominal interest-bearing account for leaving them, in fact, we have a lot of investors who put in 10, 20,000 automatically every month. It's like a dollar cost averaging, like how you invest in the stock markets, right? So if in your fund, I mean, we'll get to investor in a second. If you want to offer some interest to your investors, you can. I mean, that option is always there. And the last thing I wanted to mention, and I would love to get Brian or other people's input too on this, is we do have the capability for you to even create custom debt notes. So for example, we are working with a very large sponsor. I mean, typically their investors invest $250,000 or $500,000 per deal and things like that. And some of their investors have come to them and said, I'm going to invest in your next guy's deal. I'll probably put $200K in your deal, but I mean, I'm willing to give you the money, but I don't want it just sitting around. So in this platform, you can actually create a custom debt note, which says that, okay, I'm giving you 3% interest, and retire that note when it's ready to, when you're ready for the next investment. So the most important point is, I think you raised a good point. Having a deal actually kind of lights the fire under the investor in a good way. And you can absolutely do that in this customizable fund, not in the traditional fund, blind pool fund, but in a customizable fund, you're still doing one deal at a time.
And they don't have to go through the process of signing a PPM.
No, that's the beauty of it. Yes, there's one PPM. I mean, obviously, they have to sign a PPM when they join the fund.
Right.
We do have individual deal disclosure documents. They do have to sign that, but that's like a simple 1 or 2 page thing. And because that shows the details of the deal and any conflicts of interest you may have or whatever. So, but that's a lot simpler than asking them to sign a 30, 40 page PPM. So,
Yeah, cool.
Now here's something that I'm hoping works out in my favor. I think it will. Since they're investing in the fund and the fund is investing in the deals, my fund has a $50,000 minimum, and a lot of syndications, also have $50,000 minimums. Once somebody's invested the 50,000, I've had a lot of investors that have said no to deals because they don't have enough liquidity. It's like, hey, I'm tapped out right now. I could invest 25 right now, but not 50. So repeat investors who are just like, I'm not liquid enough right now to invest in this deal. But what I'm hoping, and like I said, I've only done one capital raise in the fund that I set up. What I'm hoping is if I ever get to that situation again, now I don't have to worry about waiving the minimum $50,000 because they're already in at 50 and they're already investing in the same vehicle. And now it's probably going to be easier. I'm guessing it's probably going to be easier to get those, those people who would invest but may not be, liquid enough to hit your minimum. But we'll see how that works.
That's been our experience, Brian. I mean, you'll have to see how it works. That's been our experience with our investors. Yeah. And it's a lot easier to take incremental dollars. And we certainly encourage the people to have lower minimums per deal, not necessarily lower your minimum per fund. I mean, you can have a 50K minimum for the fund, but have lower minimums. The analogy is very simple. I mean, this goes back to the investor behavior during recession, right? If I were to come to you and say, hey, you want to invest $100,000 in the stock market, here is one stock. Yeah, maybe you can pick it. Or if I tell you, you can pick 10 different stocks at 10,000 each, what would you choose? I mean, yeah, I know there are people who want to go for the $100,000 big bang, but most people prefer a diversified portfolio. So. Other comments, questions? All right, let me just spend about just 3 or 4 slides quickly on Investor and tell you what that is. We are one of a kind platform that brings together investors, sponsors with this new type of fund called a customizable fund, which we kind of already have talked about it. The way it works is you bring your deals. You can be a GP, a co-GP. You can even be an LP in a deal. You don't have to always look for GP deals. You bring your investors. You also get exposure to investors through Investor. And we help your investors build a custom portfolio. So here is the most important point. It's one fund, but everybody has their own custom portfolio. So like I said, investors during times of recession prefer people who can actually help them build a holistic portfolio, taking their entire financial situation into account. And when a deal exits, like we talked about, they can just reinvest or withdraw, but the default is it just stays in the fund, which helps it grow faster for you and faster for them. And massive business model flexibility. You can put debt notes, syndication deals, fixed interest notes, literally almost any asset class. And the reason you're able to do that is they're investing in one deal at a time. Evergreen fund, you never have to add you don't have to go to the attorney for each PPM. Typically, I don't know how long it takes, maybe 3 weeks, 2 weeks, if your attorney is pretty fast to do a new syndication deal. I mean, you can get it once you know how to use the platform. You can get a deal going in about 1 hour or so. And you can invest as a GP, a co-GP, and you can build out your fund management revenue as a LP. Yeah. So we don't think of us just as a software provider.
Hey, Badri, can you go back one slide?
Sure.
There's something like the bottom part, I think, is important. The invest as an LP. I mean, we're all familiar with broker dealer laws, which says, if what you're doing looks like you're a broker, then the SEC is going to treat you as a broker. If you invest into a deal as an LP and you're not getting any GP percentage, you're not getting paid as a GP, those broker dealer laws are now, they don't apply to you anymore, is how, one attorney's explained it to me, because, you're not a GP, you're not getting compensated for that. So the invest as an LP is basically, you go out, you find a deal as a fund manager, and you say, I really like this deal, and then you put your investors into that deal, the fund goes in as an LP. You're not getting a GP percentage. There's no agreement with the GP for anything else. You're investing 100% as an LP. And so you can, according to my understanding and how, my attorneys have explained it to me, you can essentially sidestep that broker dealer requirement when you're raising capital as a GP. So anyway, that's something that ends up being pretty powerful. But
yeah.
And then how do you get paid? The answer is, you can set up fund management fee on the inside so that you can skim a little bit off the top before it goes to your investors.
Yeah, thank you. Thanks for the clarification, Brian. And remember, these are not all mutually exclusive. So let's say you do a couple of deals as a GP or a co-GP, a year or 3 deals. You want to, again, it goes back to maintaining a holistic relationship with your investors, right? If you come every 6 months or a year and you don't have, then you're not building that relationship. So you can intersperse LP deals where you're just making, I'll be honest, you're not going to make as much money as an LP as a GP, but what you're doing though is building out a complete portfolio for your investors and offering them a steady stream of deals. And maybe you're giving them access to deals which they won't be able to get in. Maybe you're investing $100,000 in a deal and slicing it into $10,000 chunks, and then allowing them to come in at a 10K chunk, which the main, they probably would never do it. And then you're building, people are grateful for that. Saying, hey, you got me into a deal which I wouldn't have gotten into otherwise, So you can use this judiciously as a mix. Maybe it's a GP deal where you're completely owning the asset. Maybe it's a co-GP deal where you're capital raising and doing a few other things. Or maybe you're just, you don't even have to do a GP or a co-GP. You have to go to a sponsor, negotiate or whatever, and then do all that. To invest as an LP, I can't think of anyone who's going to say, no, I'm not going to take your $100,000 check. They're more than happy to take your check, right? Because as far as they're concerned, even though you're investing from a fund, you're just one investor. You're not asking them to deal with 10 different investors putting 10,000 each. So if that makes sense. We partner with you in all aspects. We set up your legal entities, create a customized PPM, do the subscription agreements, Reg D filings, we do KYC accreditation and AML checks, reconciliations, tax audits. Investors get a single K1, by the way. I forgot to mention that. That's one of the big features which investors like in this platform. Even if they invest in 10 different deals, they get a single K1. So think of us as a back-end business partner who help you with all aspects of running, marketing, launching, and scaling your fund. Don't think of us just, people compare us to other software portals out there, but really that's not fair because a software portal is just one piece of what we offer. So to recap again, we handle everything, including the initial legal setup. You can create an evergreen customizable fund, which can live forever, basically. And what we have is a relationship with hundreds of sponsors. And you can have access to a curated list of LP investments from Avestor. If you want to negotiate either, if you want to invest as an LP or a GP, you'll still have to do your due diligence. We'll never tell anyone saying that, okay, just take our underwriting and go with it. But that's another benefit. Investors sign a single set of legal documents. They can customize their portfolio. And even if they invest in 10 different deals, they still get a single K1. Great platform for IRA investors. We do KYC checks, accreditation checks, and even anti-money laundering checks. Nobody cared about that before the Ukraine war, but actually we have found people who are on a watch list, and that's not a good thing. And then this is a little geeky, but let me explain this for a quick second. I won't spend too much time on this. We are the only platform in the world which will allow you to backfill your GP capital. What do I mean by that? Let's say maybe it's your own deal, you're raising $1 million, you're 100K short, stuff happens, right? Or maybe you have negotiated a capital raise for somebody, but they're going to give you advantageous terms if you only raise $500,000 and you're 100K short. You put your own money in, and you can slice that. Let's say you put 100K and then you can allocate 10, 20K chunks or whatever, 6 months later, 1 year later, or even 2 years later, and you get a portion of the cash distributions, not a big deal. Other portals do that. But we are the only platform in the world which will allow you to get a portion of the capital gains also. So what this will, for example, let me give you an example. Let's say your money was tied up for 6 months. It's a 5-year deal. The deal exits with some capital gains, hopefully in 5 years. So since your money was tied up for 6 months out of 5 years, you get 10% of the capital gains. And this is a way of moving inventory capital from deal to deal and decouple closing a deal from raising all the money from the investors. I'm not saying go invest your money all the time, but I'm saying you can bridge the gap here. It's a feature if you want to use it, but a lot of our sponsors like that. So
real example, I just raised capital on a Houston deal, 506B. I'm looking down the list. I know everybody here. So I put $100,000 in that deal. So if somebody comes to me tomorrow and says, man, I really want to invest in something today, I really want to put some money into it. What that allows me to do is let them buy some of my shares in that deal. And the sponsor is never going to know about it. I mean, basically, I just sell them a couple of my shares. They go into the portal, they take some of my shares, my money comes back to me and I can use it for the next investment. So if you ever have an investor that wants to deploy capital now, or, after you've closed on a deal and you have your own money into it, or the GP has money into it, you can essentially take investors anytime that they come to you.
And you're getting paid for it. Not just in terms of dividends and preferred the distributions, but you're actually getting paid for the back end also. So it's not like, hopefully you believe in the deal to be in it for at least a few months. Then if you don't, then well, you have no business being in that deal anyway. So
if any of you guys want to invest in a Houston deal, I can hook you up. There you go.
So that's pretty much what I had. Brian, did you want me to do a quick 3-minute demo? It depends on what people want.
Tell you what, let's see if people have more questions.
Yeah, let's do it.
If there's a silence for a second, you can start queuing up your demo, but give people a chance to type questions.
I know there's a lot to digest here.
There is.
I've got something that I was kind of curious about. I know I've seen before slides on your structures, how you can put people into the structure for the funds. How would it work? Like, say, for example, you want to partner up with some other capital raisers, say, for example, 6 months from now, me, Brian, and I'm not familiar with Rick Martin, but say the three of us wanted to work together and Brian's already got a fund. Could we all three come together in that fund and raise capital into it and put it in deals? Or
maybe this goes into more details than others want, but let's go ahead and show some structure slides. Yeah. So the answer is yes or no, yes and no. So, I mean, it depends. So this is what you'll be setting up at the top level. So you'll be setting up a customizable fund LLC, and you'll be setting up a management LLC. And then for the customizable fund, you'll have a PPM, operating agreement, subscription agreements, and do the SEC filing. You'll have the operating agreement. I mean, if you, by this time, I think you know this terminology, but if you don't, I'm sure you'll learn over time with Brian's group. And fund investors will come in and invest in the fund LLC, right? I'm not answered your question yet. I will get to that right now. So creating a fund is like getting married, okay? I know you and Brian like each other, but but you should like each other for a long time. And yeah, you can get divorced and get married again, but that's kind of messy, right? So a fund is something you create with somebody you want to partner in the long term. But for the exact cases which you mentioned, what you can do in general, the fund would you still create an asset LLC. Let's say Brian is the head honcho, he's got the fund, and maybe he's partnered with John because you're after all Cronus, but everybody else comes in for one deal and maybe not for all deals, right? So John and Brian are managers of the fund, but they want to bring, I don't know, whoever it is, Rick. And so then you create an asset management LLC, and creating asset management LLC is not a big deal. Yes, you do have an additional LLC. And then you can bring in co-managers at the asset level and then compensate them there. All the investors still come through the fund, and Rick has to be comfortable in sending his investors through the fund, but he can get compensated here at the asset management LLC level. So maybe a little more detail than others wanted, but yes, the fund managers are people who are long-term partners. It's like starting a business. You don't want to start with people you don't want to have a long-term relationship with. But then at the asset level, at the asset management LLC, you can get different people to come in and get compensated there. So
Thank you.
good question.
All right. And I've had a couple people direct message me, ask if this is going to be available. So I'll just answer to everybody. The answer is yes. I'm going to put this up on YouTube. It'll probably be tomorrow, and we'll send a link out to everybody who's on our list. I think everybody here, if you didn't get an email from me in the last couple of days about this, definitely drop your email address in the chat and I'll make sure you get it. But I think everybody here is on my list. So there's that. And Badri, would you be kind enough to share the slide deck that you presented today as well?
Yeah, I'll send that over.
Okay. And I'll figure out I'll probably put it in Dropbox or Google Drive and send people a link if they want to access that too. So yeah, if you want to do a quick drive through of the platform.
Okay. Yeah, very quickly. I mean, happy to do more offline. But the basic idea is whenever you think of a customizable fund, think of it like I know nobody wants to talk about stocks and all that. I know we are all into alternative investments, but think of it like a stock brokerage account, but for alternative investments. So when you create a fund, the fund will be all branded in your name. Obviously, you won't call it the demo fund, I hope. I hope you don't. That's not a very good name. So you log in, and then you'll be able to see all the deal. You'll be able to kind of see a consolidated view, just like you would in a stock brokerage account. You'll see the account balance. You'll see the number of deals, return on deals which have exited. You can do both debt and equity, so you can kind of see all the different asset classes. I'm just giving a high-level demo. I don't know what to call this. We'll call it a vanity map. This is what you show off in your party, which you have in your house, right? Look at all the deals I'm in, and you can click on anything and get additional information about a particular deal. And this is a liquidity graph, which tells you approximately when you'll get your money back. All of you being experienced real estate investors know this is just an approximation. There's no guarantee. It may take longer. And just like a stock brokerage account, you'll be able to see how each individual deal is doing in addition to how the overall fund is doing, right? For example, this person has put $30,000 in the Silver Creek apartment, which really happens to be a real deal, but I just, for laziness, we took some pictures of a real deal here. So they've made $600, not a lot, I guess, but maybe the deal just started out. You can click on it to get additional information. You can put any pictures, you can upload any PPMs or provide any project updates. And when they want to invest in a deal, they simply go to the current opportunities page, and then they'll see all the deals currently available in your fund. Now, you might say, hey, I'm a small operator. I don't have many deals. So maybe it's just 1 or 2 deals. We can also tell you how to get debt deals in the fund, your own debt, or where you can buy first mortgage liens offering between 8 to 12%. And when they like a deal, they say, hey, I want to put 10 or 20,000 in this. And we have an entire backend portal, which will allow you to manage the investors and allocate slices. So that's the basic idea. Very quick overview. I didn't want to get into too much detail.
We are at the top of the hour. I do want to make sure we're getting everybody along. I know Rick's got to pick up, take kids to practice here soon, and a bunch of other things happening. But Badri, thanks so much for sharing this with the group. It's very, very informational, and there's lots of good information there. And for everyone else here, this fund structure, funds in general aren't for everybody, but if you're going to make a business out of capital raising, I think you should seriously look at how this can work for you. And then the customizable fund, I jumped in on Avestor. I actually did a 506B fund and a 506C fund, which is pretty slick. But anyway, I think it's a good product. But Joe, you got a question?
Yeah, really quick. And Badri, maybe it'd be worth just getting on a call with you and talking with you about this. But I've started a fund already. It's a 506c fund. I think we may have set it up a little bit incorrectly, but it's like a blind pool fund. There's some things that I would like to get some clarification on, but like where I've already set one up, we've got a couple LLCs. Is it easy to go in and kind of change things up to customize it? We've already paid, legal fees and have an attorney on retainer and all that. Is it easy to go in and change?
No, not so easy. Not impossible, but not so easy, right? So what you'd have to do is really create a completely new, the legal language for this is very, very different. So you would have to go create completely, maybe you can reuse the LLC or something, but even that will cause confusion. And then you'll have to transfer the assets from the first fund to the second fund. To be very honest, maybe in the future you can do a second fund, but it's a little messy trying to convert an existing fund is the honest answer. Am I saying it's impossible? No.
Yeah.
So.
Joe, have you brought investors into that fund yet?
No, and I'm going to say we're still at the very entry level of it. We've only got a few hard commits on that. We have not acquired a property with it yet.
Oh, you haven't? Sorry, I misunderstood it. I thought you said that. Okay.
We started it. We've got all the legal terminology, all that stuff put together. We have our PPM docs. And I can get into more details as to like where we're at with it. But I think with the state of the market and what we'd like to do going forward, like the customizable fund seems like a better option than, ours was a 506c pledged fund, but a blind pool fund. And we just haven't got as much traction.
Okay, so I spoke a little too soon. I thought you already had assets. I thought you already had investors. Brian, of course, put me on the right track here. Thank you, Brian.
Thank you, Brian.
What I'm here for. It's what I'm here for.
So that does, I'm not saying it's a lot easier. So you'll have to switch the PPM and maybe do, I don't know if you even have to do a new filing with the SEC. We can talk through it. Why don't you contact me and we can talk through it. It's a lot easier if you don't have an asset and you don't already have investors. So
perfect.
Hey, Badri, would you put your contact information?
Yes.
Everybody in that way.
Yeah.
If you guys have specific questions about Avestor, and he mentioned this earlier, but when you set up the fund, Avestor's partnered with two different attorney groups that do all the paperwork for you. And at some point, you can hop on the phone with the attorney that's assigned to the case and ask a ton of questions. Now that was extremely helpful for me, but
yeah, I didn't go through the full onboarding process because I didn't want to make this about Avestor, but thank you. Yeah, we are partnered with two top tier attorneys, and we have more attorneys on needed so we can certainly get on a call and they should be able to convert that fund. And I just put my email address and I also put my cell phone number. Give me a call. You don't have to call me just about Avestor. If you want to just chat, if you want to understand what funds are, I'm more than happy to do this for Brian's group.
Yeah, and Badri is very active in the tribe, so that's another way to reach out to him. And shameless plug, he shows up very frequently to our Friday, TGIF calls.
Yes, great meeting.
So if you want to, talk with him there, show up to the call and, just text me or DM me and say, put me in a room with Badri and, I'll hook you up. But anyway, thanks again, Badri. Appreciate your time today. I posted this in the notes, and I think I may have actually said it out loud, but we'll get the link sent out. I'll upload the video file to YouTube in a day or so, get the link emailed out, and then post it in the tribe for people who have access to that. And if you don't have access to the tribe, you definitely should be a Tribe of Titans member. Become a Titan and learn how to invest like.
There you go. Invest like Titans, right? No.
So anyway, thanks, Badri. Appreciate it, and thank you everybody else for showing up.
Hey, thanks all. Stay safe now and have a good evening.